go shift to Ethereum just to give the specifics on that one. And the picture is very similar. We actually broke a lot more supports in Ethereum. We dipped a bit lower. We're actually much closer to the ideal retracement point in Ethereum than we are in Bitcoin, which may be a good thing, actually. It may mean that we're much closer to the bottom than I think we are in Bitcoin. And here too, we are way too stretched for this to just be a wave one. So in Ethereum specifically, I'm very likely going to take this red pattern off altogether. That would leave us with the green and the purple. And just like with Bitcoin, the green pattern says that we are done. Our low that we hit on the 24th was the official low. We wouldn't expect to go any lower than that. We're going to start seeing some more bullish rallying very soon. My primary, of course, is purple, and that is calling for a little bit more of an extension for a fourth wave. So I really do see this as the bottom of our third wave in Ethereum just because of how far we've come and because of the proportions. When we look at the small picture, it gives us a bit better of an expectation for where we want to be. Again, anywhere from 29 to 3,100 would be an ideal termination point for this C wave if this is just a fourth wave bounce. So 29 to 3,500, I'm going to actually repurpose this box for that purpose. Always reduce, reuse, recycle. So we're going to bottom this, put the bottom around 2,800, put the top around 31, 3,200, somewhere in that range. That's about where I'd expect the bounce to take us into. And because of the ending diagonal shape that we're potentially going to have the C wave, the reversal could be very sharp. So don't be surprised by that. Again, that is my primary expectation that we will go lower. How much lower is yet to be seen. We have some supports at 1,900 as well as 1,710, and those are both targets that have strong confluences for a variety of reasons. As a matter of fact, our 1,900 point would mark the 1-to-1 ratio of our A wave down to our C wave down, and that would be based on A and B and building an extension off of that. That is where that would land. The second thick red line is our low that we hit middle of summer of 2021. My expectation is that if we do drop to that level, that we wouldn't drop too far below that, even though our ideal retracement point would be $1,100. Right now, I don't see any reason why we drop that low. Of course, the lower it goes, the more of a sale opportunity you have. You can buy things at a discount, and that is my expectation. So just like with any other cryptocurrency, any other asset for all that matter, we expect to see 5 waves up and then 3 waves down with a higher low. And if we see that, I would absolutely be a buyer. I'd go right back in with a relatively large amount of funds. If we do go lower in what looks like an incomplete third, definitely going to be looking to buy in that situation as well. And as I mentioned, red pattern is more or less, doesn't really make sense. It's a further, it's kind of a distant third alternative. So see what happens.